Happy morning, friends. We are continuing with the first technical session on update of recent circulars by RBI. To handle this session, we have an eminent speaker, none other than CAPR Suresh. May I request Swarnalata to escort the speaker onto the dais. Welcome with flow, okay? Due to paucity of time, I give a brief introduction of the sir. But anyway, P.R. Suresh sir is doesn't require any introduction. Okay. Okay. Thank you, sir. Over to you, sir.
Take care. I don't want to hit everybody's earbuds. Thank you for this opportunity, and we had a wonderful speech by an economist, Dr. Charan Singh. Okay, and after that we get a perspective of what we are all about. My session on today is largely related to circulars, and if you look at the circulars, normally till 1/7/2015, RBI used to consolidate all its circulars issued in a particular year and come out with what is called as a master circular on various topics. That they have dispensed it from 1/7/2015, which makes it that we need to start looking at what circular was issued at what point of time and what is relevant to us. How much time do I have, Srinivas? My session, how much time? If you can give me an idea, I'll pace my innings accordingly. Now it's about 11 o'clock. Srinivas, how much time do I have for my presentation? 1 hour? Okay, that's good. It's cool. Okay. So, apart from circulars, you also have master directions, which have an equal binding and force. Okay. If you go through the net, you will find that important circulars for statutory audit. It will come under this grouping: financial inclusion and development, relating to priority sector advances, relating to advances and others. I will deal with them, so I will not explain there. Today's deliberations will be largely related to which are relevant and important in bank branch audit. Specifically, the IRAC norms, which is the core of the audit. The last master circular issued on that is 1/7/2015. So, for our audit, still that is the latest circular, though it is 1/7/2015. Then we also have restrictions in lending and other things. Few points out of that I will touch upon. That's also 1/7/2015. Then you have a very important thing, especially considering the domain in which we are in, the amount of frauds which are happening, and the amount of spotlight on auditors as to what is the role of auditors in terms of frauds. We'll be seeing about that also, which is 1/7/2016. The master directions, there is a relief measure for MSMEs, which is a major area which I will touch upon because that will be very relevant for this particular audit. Then there is also something which is one-time restructuring is allowed for MSMEs. This circular is dated 1/1/2019. So to that extent, it's a very recent circular. Then there was a circular which was on 12/2/2018, which was about the resolution of stressed assets, which is for advances above 2,000 crores and above. Interest subvention schemes of MSMEs, continuation of that schemes. Coming to the presentation part, we will be talking about the NPA, what are all the things in SMA 1, 2, 3, where 90-day norm applies or does not apply. Subject to time, it will be the details about it can be there. Credits, accounts, regularization near the balance sheet date. What is the scope of auditors into that? Credit audit, confirmation of loan sanction terms properly entered into master. These are all the observations by Reserve Bank of India in terms of the areas in which there has been lapses which has been found, which they will be specifically looking into the auditors to look at. For example, when you talk about credits near about the balance sheet date, there has been what is called as, to illustrate, round tripping. There is an illustration where a bank has taken a loan, the loan was transferred to another bank, and from that bank, the monies came back to this account. So because of the record of recovery, the account is classified as standard. Ultimately, if you look at it, it's bank's own money which went and came back. This is called round tripping, and any such credits which are happening without sufficient sources being there or generation of income, such accounts cannot be classified as standard assets. This is an area which RBI highlighted in its report of divergence and how the asset classifications are not correctly done. In terms of credit audit, above 5 crores it is mandated for credit audit to be done, and also all advances above 5 crores, there is a platform called CRILC, Credit Report Information on Loans. This CRILC report will be available at the branch level. You can ask for it, and all the banks would have given the report of every borrower above 5 crores. So if you are able to find the CRILC report of advances above 5 crores, it will help you. It is not only with reference to this particular bank, it is the status of that borrower across banks. These are all some things which I would like to deal, but subject to time, I will get back to it. But in terms of upgradation of loan accounts, what fundamentally we need to look at it is that whenever an account which was classified as NPA, at any time during the year, you will have to have an idea about it, because at every quarter, the banks identify accounts as NPA, and the account can get upgraded. The upgradation can happen if all irregularities in that account are corrected. It is not that the account is NPA and they bring it down below one particular level and still retain it at about less than 90 days. The account can be classified as standard assets. But this is not the normal case, especially in case of restructured advances. Even if the irregularities are completely done away with. For example, if an account is classified as NPA, which has been a restructured advance, okay, and the amount of outstanding is say 6 installments. Okay. As on 31st December, all the 6 installments are paid up by the borrower. Nil amount of overdues. When you are going for audit, the account is not showing even 1 month's overdue. Everything is paid up. But the restructuring was done on 15th June 2018. 15th June 2018 was a restructure, and everything has been paid up as on 31st March. 0 overdues. What should be the asset status? 0 overdues in an account as on 31st March. Okay. Account was restructured on 15th June 2018. As per the restructured terms, all payments are done. What is asset classification on 31st March 2019? I know we are short of time, but I still like to make people think. What should be the asset classification? Standard? Any contrary opinions, views? We would like that. Please read the master circular, especially Annexure 5, which talks about when an account which has been restructured can be upgraded. An account which has been restructured, if it has to be upgraded, it has to lie in the same period for a specified period time. The specified period is 1 year. So which means if the account was restructured on 15/6 and it was a non-performing advance on that date, for a period of 1 year it has to subsist, notwithstanding the fact that all the recoveries are done. So this is the distinction between upgradation of loan accounts which are not classified as NPA and upgradation of loan accounts which are restructured and being classified as NPA but no irregularities are there. Kindly take note of it. This is an extreme case where you will find in the normal course the system will throw the account as performing advance, but the auditor's role that for non-compliance with the specified period it has to continue as a non-performing advance till 15th June 2019. This is a standard question, due date for application of interest. Interest which is debited on 31st January 2019, when does it fall due? An interest debited to an account on 31st January 2019, when does it fall due? It's debited on 31st January. When does it fall due? I'm very sorry, we have only one hour's time. Otherwise, we could have really made it that much more interesting. But I need to tell you straight away that for application of interest, notwithstanding the interest is debited at any time which the bank debits the account, The due date for that is the quarter ends only, at the end of the quarter only, which means if the December quarter interest is not serviced, then only the account can become NPA for non-servicing of interest. It is not as and when it's applied. Then when you talk about accounts which are already NPA and has been classified as standard assets subject to recovery of record of recovery, okay, there are two things which emanates. At the point in time when an account is classified as NPA, what is the amount of interest which have to be reversed? Is it the current year's interest, or if it is an infrastructure account which runs for number of years with multiple amount of restructuring and other things, is it the interest of this year and the previous year, or the interest which has never been serviced? Which of the three? You catch my point? I think I am very uncomfortable standing here. I'll move around, don't worry. Yeah, I think people at the bank also need to participate. If there is a scenario where there is NPA accounts are there and on being classified as NPA, the interest is not serviced for last 4 years, will you reverse the interest of the current year only, that is 18-19, interest of this year and the previous year, which is 24 months, or interest of all the 4 years which has not been serviced? Sorry, sir. All the 4 years. How do you say that? Where is it provided? Answer is right, okay. And let me tell you that the very purpose of classifying an account and accounting for interest income can be accounted only on performing advances. So the moment an account is classified as non-performing advance, okay, whatever interest has been debited in that has not been realized by the bank. So which has not been realized by the bank, the whole of the interest has to be reversed. This is contained in paragraph 3 of the master circular. You can see the master circular 17/2015, where recognition of interest and interest reversal is detailed in that particular paragraph. You can go through that. The major challenge which is likely to come across in the case of provisioning is going to be realizable value of security. We have been seeing that now that so many cases, daily paper you open up, you will see multiple advertisements by various banks announcing sale proclamation and calling for tenders and things like that. Take a case where a property which is borrower is NPA, okay, and sale proclamation has been done. The auction has been called for 3 times, and none of the 3 times the property is able to be sold. What is the realizable value of security for the purpose of making provision? There will be a reserve price, and after the reserve price 3 times, what normally happens is, first the reserve price is done on the basis of the valuation report which is obtained. Based on that, the sale is put up. It is not sold. Generally what happens, the bankers will reduce 10% of that value and reduce the reserve price and go for the second auction. Second time it's not done, they do 10% more reduction and then go for the third auction. In cases where you are the branch auditor, you find sale proclamations have been done and the value of the security will be taken as per the valuation report furnished to the bank. But at that price, the bank is unable to sell. Then what is the value of security you will have to take for the purpose of provisioning, especially if it is a doubtful advance. These are all practical situations which you will come across, and if you find that even the second valuation is not coming, third valuation, first thing what we should not accept is the valuation given by the valuer would have been taken as a valuation. That is straight away not acceptable. And they need to demonstrate the price which they are showing, the value which they are showing for the purpose of provisioning should be the realizable value, not something which is a paper book value or value which has been given but it's not realizable. At least the lowest among the 3, that is distressed sale value, would have been given in the valuation report. Apart from the normal valuation report, you would have given distressed sale value. You need to take only the distressed sale value provided the property is not being able to be sold. In any questions you can always are welcome, because that's what adds to my presentation and my value here. We have been going through this multiple banks and consortium. My presentation is fairly random, okay, you'll have to keep up with that. In the case of multiple banking, or for example, the entire Nero Modi's case, or so many multiple accounts are there, or consortium accounts are there. What happens if the account is NPA? If there are 4 bankers, the account is NPA in one bank. If you are the auditor of, there are 4 banks, you are the auditor of B bank. In A bank and C bank, it is classified as NPA based on the credit report which you are able to see. D bank has classified the account as standard. You are the auditor for B bank, where as per the records given to you, the account is classified as B, as a standard asset. What is your take as a statutory auditor of the branch? Is it a standard asset? Why? Consortium lending. So on consortium lending, what is the norms? NPA in one bank is NPA in all other banks. In terms of multiple banking, what is the norms? Same norms. So if it is NPA in one bank, all other banks it's NPA. Any other views? Why independent? My good friend Ram Kumar says independent. I like him always, right from the days when we did CA together. Why Ramu? No, you have me, so you don't need to have guidance. Yeah, it's simple, because if you see the Reserve Bank Master Circular on income recognition, asset classification, provisioning norms, it talks about record of recovery. In terms of record of recovery, if the member banks have a record of recovery in which, as per your bank's terms, if the record of recovery is proper, then you are entitled to classify the account as standard asset. Notwithstanding the fact the asset classification is different in other banks. So this is the reason why I put it as part of it. You can read Master Circular. So in fact, we had a very interesting scenario that when it came to frauds, okay, if one bank classifies an account as fraud, we put it across and said that if one bank has classified the account as fraud, especially if it is a lead bank, even if the account is not classified as a fraud in your bank, what should be the classification in the particular branch? Should it be classified as fraud, or should it be classified as not as a fraud? Particular bank, correct. So it's classified as a fraud in that particular bank. In your bank, should it be classified as fraud or not? You can't do that, no? Exactly. This is the dichotomy when it comes to certain, sort of treatment. As far as RBI is concerned, the fraud is not by a borrower, the fraud is not by an account, fraud is by the borrower. So if an account is classified as a fraud in one particular bank, the RBI says all banks should follow and classify the account as fraud. Because ultimately if it's fraud, fraud is by the borrower and action is going to be taken including whether the enforcement agencies or whoever will come behind them. So account has to be classified as fraud. Whereas in terms of asset classification, even after this dichotomy happening, even after that, very recently we had an interaction with RBI also, they say Master Circular has not been changed. So with reference to asset classification of individual member banks, it will still be record of recovery. So this is something which we'll have to live with till such time they come out to change the Master Circular. Then we also have the situation where account is standard, okay, but what has happened is the business unit has stopped functioning. The borrower has been pumping his personal monies and selling his private assets and putting money into the account. There is a significant erosion in the value of security by more than 50%, or other threats in terms of where the unit is not functioning or there is a strike or whatever it is. In such cases, though the record of recovery says that the account is a standard asset, what should be the treatment to be done as far as asset classification is concerned? Things which you normally would not be looking at, but then especially if these are large advances, this is exactly the scope which even Dr. Charan Sikh said, what the value which can be added by our profession comes there. The account in terms of record of recovery says it's a standard asset, but there is a significant erosion in the value of worth of that company by 50% or more. Feel free to answer. After all, I am there to guide you, and if at all I can add value by telling what is the norms and things like that. Okay, it is an interactive session because I learn more from your interaction. Please. It can be classified first of all as a non-performing advance. Yeah, that's what the norm says. Norm says that if there is a significant erosion in the value of securities or where there is a threat of recovery, whenever there is a threat of recovery, there is no point in keeping such advances as standard assets. So it has to be immediately downgraded, and based on the severity of the amount of erosion, if the erosion is 50% and above, it can be classified as doubtful advances. If the erosion is 90% and above, it has to be classified as a loss asset. Very simple, as I told you, if it's a large advance, apart from the operation statement, you will see not many transactions would have happened, number one. Second, if you see the financial statements audited previous year, it will give you an indication about it. Third is, if you look at the communication file of the borrower, you will find some more information about it. Either no unit is closed or whatever it is. Fourth, there is an inspection report which is supposed to be there at the branch. Then fifth is there is a process note for every review, renewal and things like that. So there are enough of documents which are available at the branch for large advances which we as auditors are supposed to look at. And by perusing that, I am sure we will be able to make out the quality of the asset, and based on the quality of the asset, if there is a significant erosion on that, we need to take a call on this. Fraud, there is a separate circular on fraud, so I will deal with that at that point in time. Yeah. In terms of fraud, RBI says in its circular also, where end use of funds are diverted, that is nothing but fraud. How many cases do we find in normal course, the operating accounts, there is diversion of funds? How as auditors can we find out? If the short-term funds, the working capital funds have been diverted for long-term sources, which we as auditors give in care or report and things like that also, that is also a diversion of funds. If diversion of funds happens, that is nothing but fraud, because the intended use for which the loan is given has not been used for creating those assets, so that diversion itself is a fraud. Agricultural advances, normally it says agricultural advances is short-term, long-term, not the 90-day norm, correct? Are there any exceptions to this where agricultural advances are there, but it's not crop season based? Borewell is also part of agriculture. Borewell, tractor loans or equipment loans, all these are part of agriculture. Are there loans to agriculturalists which are not treated as agriculture loans, and this 90-day and this short-term, long-term crop don't come? Gold loans to agriculturalists within 3 lakhs is also considered as that, because agriculturalists, when they want to do, they take these loans also. If the end use of that they mention it as agriculture, gold loans also is treated as priority sector and agriculture. Farmhouse, good answer. Farmhouse by whom? By the farmer? Then it becomes house, not farmhouse. Answer is good. I definitely like it. Okay. The reason is that any investment made by non-agriculturalists, even for agricultural operations, for example, an advocate, okay, has some lands, okay. His basic profession is advocate, but he is having some passion, so he does some agricultural also, okay. He takes a loan, okay, or he constructs a farmhouse as was told. Such advances which are there are not to an agriculturalist, so such advances don't get the cropping pattern. Same way, if an agriculturalist is there, but if the agriculture takes loan for buying a Benz car can be used for agriculture purposes. Okay. So such advances which are non-agricultural end use by an agriculturalist will also not have the 2 cropping patterns and things like that. That will come under the 90-day norms. The third thing which will come is, you have what is called as allied activities. In agriculture, you have allied activities. Allied activities could be your poultry farming or any of those sort of things which are not tilling and doing anything on the land. But these are all allied activities. These allied activities have a 90-day norm and not based on crop seasons. So this you need to keep in mind. Then we have project loans. What is a project loan? A loan given for the purpose of creating a asset over a period of time, which will bring in economic resources to the borrower. Okay. There are certain norms related to project loans. For want of time, I would like you to go through the master circular of loans, project loans, which are specifically detailed in that. And one of the important things in that whenever a project loan is given, it is a responsibility of the bank to fix the date of commencement of commercial operations, which is called as DCCO. This has become very critical because on the basis of the DCCO, the borrower is supposed to achieve the DCCO, and then after that, the economic viability and operation starts in such project loans. Okay. So what happens is that in the case of DCCO, there can be extensions which can happen, okay, because of delay in the project. So if it is, there are, again the project loans are bifurcated into, one is called as infrastructure and another non-infrastructure. In the case of infrastructure loans, the DCCO can get delayed by 2 more years from the originally envisaged. Even then, such accounts cannot be classified as NPA. For non-infrastructure, up to a period of 1 year, if there is an extension of DCCO within the time of original DCCO and making application and being approved by the bank, for 1 year extension, it will not be classified as NPA. In any other case, if the DCCO gets extended beyond 2 years for setting up the unit, or 1 year for non-infrastructure, other than legal cases, if there is going to be a court case because of dispute on title, in such cases, apart from this 2 years and 1 year, 2 more years for court cases are also given. So which means up to a maximum of 4 years for infrastructure and 3 years for non-infrastructure. In the case of legal cases, such accounts can continue to be performing advances. This is where I said, in such cases the interest would have been accounted till that date, but after that the entire interest has to be reversed. In such cases this can happen, but the interesting aspect is, if a borrower is being able to pay the monies during the time when the DCCO has not been achieved. For a non-infrastructure, there is no other thing. Beyond 1 year, he is not able to achieve the DCCO. Say for example, he is achieving the DCCO after 20 months from the original date, but he has been regularly paying all the monies. Then how will you classify? The DCCO has not been achieved beyond 12 months, but he is regular in payment. As on 31st March, he says May 2019 will go on stream. So as on date, about 18 months are over. As per the stipulation, he is continuously paying all the monies. What is asset classification? Record of recovery says it's standard, but what is the asset classification? Is it too heavy, or after the economic address by Dr. Charan Singh? I am asking questions for which I don't have answers, is why I am asking you. Eligible for restructure. Why NPA? Answering NPA is easy, but then you will have to convince the banker, no, he is not going to allow you to pass MOCs. In terms of infrastructure loans, it says that where the DCCO is not achieved, it's going to significantly impair the ability of the borrower to make payments. And that is a fundamental reason why you fix the DCCO, so that the unit starts operation, and operations will enable them to pay the money back. So because of which, even if there is record of recovery says the monies are all paid, for want of non-achievement of DCCO, the account after the due date has to be classified as an NPA. These are all also illustrations where account which otherwise would have to be classified as standard assets will become NPA. These are some of the reasons. In terms of deferment of DCCO, as I told you, 2 years for non-infrastructure, first 2 years, and then because of court cases 2 more years. The first 2 years you can recognize income, but if there is going to be 2 more years for legal extension, then the interest cannot be recognized even during that period. So only for a period of 2 years or 1 year, interest recognition can happen, even in case of the legal cases. If there is going to be extension by 2 more years for whatever reason, during that period, the account can continue to be a standard asset, but interest income cannot be accounted. These are all exceptions to the rule. When an account is standard asset, you account income on accrual basis. Which one? The same thing, no? I think deferment of DCCO, is it restructuring? Yeah, I already covered it. If there is a deferment beyond 2 years, 1 year, because of want of time, I am cutting across some of them because there is a lot more thing to. This is my 8th slide. I have 20 more. Extension of the period beyond the original repayment period, that's what I have covered also, 2 years and 1 year. Okay. And whenever there is a change in the project size beyond 25%, whenever there is a change in the project size beyond 25%, that is not treated as restructure. So if an account is given, what is the norms when it comes to restructuring? The norms related to restructuring is, excepting for DCCO, any other account which is restructured, upon restructuring the account has to be classified as non-performing. The exceptions to the rule is for DCCO, for extension of DCCO. Same way, when it comes to the scope of the project, for example, initially you are putting a cement plant of 100 ton per day, okay. Then you are increasing that to 150 ton per day. So there is a scope is extended beyond 25%, the size, operation, everything, because of which it will not be treated as restructure, but then there are other parameters which are there to comply with, okay. If that is complied with, it will not be treated as restructure, and if it is not treated as restructure, it need not be downgraded. Multiple revisions in DCCO, I told you, multiple divisions in DCCO, as long as within the time frame of 2 years for infrastructure, 1 year for non-infrastructure, and court cases 2 more years. Any number of times restructuring will not be treated as multiple restructuring. The asset classification will continue to be a standard asset. Treatment of court directives of asset classification, income recognition and provisioning is a very interesting case. For example, if there is a Kingfisher Airlines and the Karnataka High Court gives a direction not to treat that account as non-performing for whatever reason it is. You are the auditors of that particular bank. Sorry for giving a particular client's name which are not supposed to use. Just to illustrate, if the borrower's account, the court, High Court of Karnataka gives a direction not to be treated as non-performing advances, to be treated as a standard advance. This happens largely in all power cases, because in power, the supply of the gas by the gas authority of India would not have come. Because of external factors, they would not have been able to commence, because of which they would approach the court. Court will give a direction not to classify the account as NPA. In such cases, you are very sure that even though there is no recovery for last 2 years, the asset classification will be standard, right? There is no dispute, because we can't disobey the court orders, then it will become contempt of court. While treating that as a standard asset, the next question comes, will you account for the income? Account is a standard asset. Can the income be accounted, especially knowing there is no income which has been realized? What should we do? No, first let us talk about income. Do we recognize income? Because income is accounted on standard assets automatically on accrual basis. So we need to be prudent enough to say, whilst the asset classification is on the basis of the court directive, income is to be accounted on the basis of the record of recovery, which is not happening in this case. So income is not to be taken. Then next, account is standard. Can you make provision? I am talking about a court case where the court has granted the status as standard asset. You are not recognizing income. Will you go out to make provision also on that account for the impairment which is likely to happen? We can take a stand, but then the Reserve Bank's thinking on this is that whilst the direction is for asset classification, provisioning is what is said in the RBI circular also, is the minimum provision. That doesn't say that this is the provision and nothing more or less can be done, especially when you ascertain that there is a loss which is likely to arise on this particular asset. Making a provision is warranted. So this is the stand of RBI in the case of court directive cases. Pre-shipment credit and receipt overseas. An account is NPA, okay, and in that borrower's account, you also have pre-shipment, post-shipment credits backed by LCs. Will that be classified as NPA? If a borrower has 4 accounts, one is a regular operative CC account, one is a packing credit, pre-shipment credit, one is a post-shipment credit, backed by LCs. LCs are discounted, which is guaranteed by a banker of a third country, which is an acceptable banker. Can that account be classified as NPA? Read the master circular. It says that post-shipment credit backed by LCs, okay, which have been approved through the Exim Bank, such accounts need not be classified as NPA, though the account of the borrower is NPA, such accounts, because in this case, it is not the borrower who needs to make the payment. It is the third party banker who has to make the payment. But on the due date of lodgement of that LC, if it is not getting honored, then such cases will have to be accounted as a classified as standard NPA account, because there is reneging of the LC by the banker for whatever reason it is. Otherwise, even in a standard as in an account where one borrower, there are multiple accounts, there are exceptions like this. Provision, what is the auditor's duty for provisions? I'm more than halfway mark, so I need to rush through. Yeah. What is the duty of the auditors in terms of making provision? Kindly read paragraph 5.1.1 of the master circular. It says the duty of asset classification in making provisions is that of the bank management. What is the role of auditors? No, it says and statutory auditors. So the primary responsibility of making correct provision has been, by the circular, has been handed down on the auditors. So whether the bank management does it or not, we are duty bound to make the provision correctly. If an account becomes NPA, especially if the account is restructured, for example, if an account is restructured on 2014 and the repayments have to commence, okay, repayment to commence from 2017, okay, November 2017 onwards the repayment should commence, okay. What happens is the borrower starts paying in November 2017 till March 2018 he pays correctly, okay, but during the current whole year, okay, he has not paid the installments. So we are classifying the account as NPA. So when you are classifying the account as NPA, what should be the date of NPA? Is it with reference to the default which has happened during the current period based on the revised restructured terms, or when should the account be classified as NPA? You got the question correct, or should I repeat? An account is restructured in 2014, the revised restructured term says repayment to commence from November 2018. The borrower starts November 2017. The borrower systematically pays from November 2017 to say May 2018. After that he is not being paying at all. So what should be the date of NPA? So May 2018 to 3 months is the date of NPA August 2018 or anything earlier? August 18? Any other views? Exactly. See, especially in cases where an account has been restructured and after the restructured terms are not complied with. In such cases, the account should be classified as NPA with reference to the pre-restructuring terms of repayment, which means in November 2014 when it was restructured, okay, that time itself, no, the account would not have complied with that. So before November 2014 will be the original terms of sanction, pre-revised. We'll have to see with reference to that. When you see with reference to that, account which would have been classified as substandard during the current year, invariably definitely becomes doubtful, but whether it becomes doubtful 1, 2, 3, in many cases we have seen account straight away gets classified from substandard asset to doubtful 3. So when you see the asset classification which is given to you, kindly pay attention of large advances which has been classified as NPA during the current year. Determination of the date of NPA is our primary responsibility. In such advances, if the date of NPA is wrongly made, as in this case, we are duty bound to reclassify them and take it to the original terms of sanction. That completes in a nutshell the IRAC norms on advances, which otherwise I could have taken you for 3 hours also. Okay. Then we will quickly move on. These are the other circulars which are there, okay, especially the one on restrictions on loans, okay. It restricts loan to certain directors and key management personnel. Then also there is certain norms related to loans against shares. Loans against shares cannot be given to any of their employees. Loans against shares can be given to outsiders, subject to that the what is called as the drawing power should not fall down. If the drawing power has to fall down based on the volatility in the market, additional security should be brought in. If the additional security is not brought in, then the drawing power, if it is not there, such advances are termed as very risky advances, and additional provisions in terms of risk weights are also to be done by the bank. Then RBI prohibits specifically loans given to ozone depleting industries. Okay, banks are not supposed to fund any of the ozone depleting industries, so there is a bar on that. Okay, then loans against banks, there is a stipulation. If loan against the bank, loans against own deposits, it is only own deposits, which means if you are having a deposit in a particular bank, loan can be taken only in that bank. You cannot take loan against A bank, deposit in A bank, loan in B bank. That is not permitted. If you come across cases, these are all prohibited. So this you have to highlight, because these are all non-compliances per se. Advances for purchase of gold, there is a complete embargo on loans given for purchase of golds, either in the form of bullion, jewelry, or whatever it is. Purchase of gold, no loan can be given. But the question will come, what about jewel loans? Jewel loans, you already own jewels. That jewels are given as security, on the basis of which that loan is given. But no loan can be given for buying the loan itself, gold itself. Okay, that is the distinction. Except for companies which are into the business of gold jewelry, like Tanishq or whatever it is. Okay. That is the one. Advance against gold ornaments and jewelry is permitted, but for purchasing loans it's not there. Loan to real estate sector also, there is a embargo on giving for the purpose of purchase of land. For buying land, no loan can be given. But if it's an integrated project of a land and then a residential complex coming or commercial institution, then it's permitted. But otherwise, only for buying a land, no loan can be given. You will find in many cases, some people would have taken housing loans, only the land would have been bought, they would not have constructed the houses, then it's not to be treated as priority sector advance or housing loan, it has to be classified as this and reported upon, where the construction has not been taken up. Then loan to MSMEs, there is a specific directive to give loans to micro, small and medium enterprises. There is a thrust area. Out of 40% of the total advances of a bank should be towards priority sector, out of which 18% should be directly to agriculture, and all other things put together 40% should be there. If the bank fails to maintain 40% ratio of its advances on priority sector, the differential of whatever is a 40% towards the CD ratio, they have to invest it in RFID bonds. So this is something, there's a stipulation on banks. These are all covered in this. Then the loan system for delivery of bank credit, it's something which has been there earlier also, it's being now monitored. Any large advances, okay, about 100 crore and above, now they have said that the loan has to have two components. One is a fixed component, one is an operative component. Over a period of time, a portion of the loan is to be taken out and to be created as working capital demand loan or working capital term loan, which can be paid up over a period of time, so that what happens is that the distribution of loan, it's not that one loan is given, it's permanently with the borrower. This is the loan system. Then working capital finance for information technology and software industry, because largely earlier there was nothing tangible. The products which they develop or the processes which they develop, technology, there is nothing which is tangible. So this has been brought in to encourage loans to be given for information technology sector. But as auditors, what we need to look at is, if a loan has been given and it's working capital for information technology companies, largely they will have what is a major item called unbilled revenue. This unbilled revenue is the area in which you will find lots of things will be kept under that. They will say that we have not billed the revenue. The revenue has to be billed on the basis of some milestones. But ultimately, if you look at the terms, it will be something where they will be pushing lots of things under the carpet, and eligibility for drawing power will be there. This is one area. Same thing, product development. They will keep an asset called product development in the balance sheet, which will be running for years, but ultimately it will not translate into turnover. So if you start looking at unbilled revenue vis-a-vis the turnover, same way the product development expenses vis-a-vis the turnover which happens, that will give you a decent idea as to whether everything is okay in that particular loan or not. Guidelines on settlement of NPA. Even if an account is settled through NPA, RBI stipulates from the other member banks and consortium banks, okay, you need to obtain a decree. And if you are going to get it, you have to get that if a suit has been filed with the concerned authorities, whether it is the SRFSC or whether the earlier DRT, you will have to get a decree from the court to say that final settlement has happened. Otherwise, the case will continue when this happens. This is operative in nature, but then in large advances, you will have to ensure that it's there. Otherwise, you will have to put it as part of your long form audit report. Then we move to the next circular, which is on frauds. When you talk about frauds, the very purpose of issuing the fraud circular is twofold. One is detection, second is reporting of it. Okay. And third thing is about the provisions to be made by the auditors. When you talk about it, that fraud at the branch, there is a report called Fraud Monitoring Report, FMR1. This has to be sent by the bank to RBI on a periodic basis. Much before that, the process of how fraud gets done and how it goes is, first at detection, the moment a fraud is identified, it gets reported. And once it gets reported, it goes to the competent authority at the head office. They appoint in many cases what is called as forensic audit. A forensic audit report will be there. That forensic audit report will tell you the details of the various things. Based on this is placed before a committee at the head office called fraud cell, and then placed before the board by way of these are all the frauds. And then it gets stamped as a fraud. What is the role of the auditors is, you will have to look at incipient frauds at the branch. Frauds could be, as I told you, that if you go through this, a very detailed, exhaustive, what are all the frauds, how it is being done is also given, and you can look at it, including, as I told you, diversion of funds could be there, or where you will find that a loan has been taken against the property, loan against property. The value of the property would have been 10 crores. They would have taken 7 crores earlier. Suddenly they revalue that at 20 crores, and then 14 crores is availed as a loan. Additional 7 crores is given based on increase in the value. Then within a year, you find the account becoming NPA. That time when the valuation is looked at, it is only about 8 crores. So you find it is by simply increasing the value of the security, additional loans have been taken, and the account becomes immediately NPA. Such accounts are what is called as loans which becomes within 12 months are called early loans, which are falling into that, where the mortality rate is high. Such accounts are also treated as fraud accounts. Then above 5 crores, the bank has to send a flash report the moment a fraud has been identified. So kindly, as branch auditors, in your initial communication to the bank, ask for these details. Ask whether any flash report regarding fraud has been reported to the bank. If that is the case, have an access to that. Look at it so that you will find out whether it's a fraud or how to go about it also. Above 5 crores, it goes to RBI, and above 10 lakhs, it goes to the board. This is a very detailed one, red flagged accounts. A red flagged account is, as I told you, in the process of fraud, an account where the initial fraud has been reported, gets flagged, and that's called red flag. And as per RBI norms, the moment an account is red flagged, within 6 months, the account has to be classified either as a fraud, or if it's not a fraud, has to be removed out of it. It cannot continue for more than 6 months under the red flag category. So these are all the processes which RBI has mandated in terms of the circular of determination and the timely manner in which it can be determined, and classifying them as fraud. And in terms of provision, if an account is substandard asset but is treated as a fraud, in the normal course the provision will be say 15%. But if it's fraud, what is the provision required? No, securities are there. Take 100% security, it is treated as a branch at substandard, but its account is treated as a fraud. What is the requirement of provisions? %100% when, sir? And why? Answer is right. See, the point is the account is fraud, 100% provision is required. But RBI also gives a leeway that where account has been classified without any significant delay in determining the fraud, it can be spread over 4 quarters. Which means if an account is classified as a substandard asset on say 28 February 2019, but identified as a fraud on say 15th March 2019, then the bank will be having the liberty to make 25% for this quarter by putting the 3 quarters later as against 15% which would have in the normal course has come as a provision for substandard asset. This 8.12.4 of that circular is very dangerous. RBI says it is not only the borrower, whoever has facilitated and played roles in the fraud can also be held responsible. For example, if a projection of a project loan has been made by a member of our institute and it is significantly varying with the norms or whatever it is, and it's found that he has played an active role in the process of obtaining the loan itself. He may not have used the loan, but if he has enabled somebody to obtain loan on the basis of an exaggerated values put into the project report which has been submitted, which the bank has relied upon, such people can be called upon and they can also be held responsible for the frauds by the borrower. This is an area of concern for us as professionals when we do the other side of it. Some of the early warning signals which I quickly will run through you is default in undisputed statutory payments, frequent bouncing of checks, flimsy reasons to postpone go-down inspection, frequent ad hoc sanctions, not routing sales proceeds, high value RTGS and to unrelated parties, substantial increase in unbilled revenue, variations in stock reported as per stock audit or as per the statutory audit. These are all, this is a summary of many points which are there, but these are all something which when you go for your bank audit, keep this in mind whether these are all these are all early warning signals. After early warning signal, the next stage is the red flagging. Significant movement in the inventory, disproportionate turnover, significant increase in working capital borrowing, inflation in value of security, substantial related party transactions, any search and seizures by any statutory authorities, whether it is income tax, sales tax, enforcement director, whoever it is, then frequent resignation of key personnel. These are all early warning signals only. It doesn't mean anything, but this should make you as auditors to have your antennas up to look into such accounts, especially if they are large advances. Then we move to the next thing, which is talking about relief measures taken by banks in terms of natural calamities. In terms of natural calamities, the state level banker committee will say that which are all the districts which has been affected by drought or famine or whatever it is, and the criteria for it is the crop should have been suffered not less than 33% of the normal produce should have come down, and when you restructure the advances, agricultural loans, if it's only there are 2 seasons in every year, out of the 2 seasons, if the drought or flood or whatever it is has affected only 1 season, then it is not to be taken as completely to do that, then it can be postponed by only by 1 year. But if it is going to be affecting both the seasons, then the period can be more than 1 year. Long-term loans, same thing, natural calamities which happen, where only 1 crop is there, then I told you that only 1 season, 1 year can be done. Beyond 1 year if they are doing, it's only but nothing but evergreening in that account. I told you the other loans, allied activities. For allied activities, till the norms are 90 days, but we have also in our various courses of it found that the system puts the date for classification of other allied activities also as agricultural advances, it puts them as cropping pattern, which is wrong. So when you go for the audit, especially large advances, kindly see allied activities should be a 90-day norm. It cannot be linked to your cropping pattern because allied activities has nothing to do with agriculture. But if you find any such cases, you will have to revise that and see in relation to what is the norms related to allied activities, not with reference to cropping pattern. The asset classification of restructured portion of STL and LTM, even in a particular borrower account, agriculture is having 4 accounts. If 1 account has been restructured, the other accounts are not restructured. The other 3 accounts can be, 1 can be substandard, 1 can be standard, 1 can be doubtful, the third can be a loss also. So the account which is restructured alone can be a standard asset. The other classifications will continue to be there. It need not necessarily be aligned together. Whenever a restructuring happens, including in agricultural advances, for any natural calamities, such account should be reported as restructured advances, which the banks seldom do. You auditors have to necessarily look into any accounts which has been restructured, whether it's an MSME account or whether it's agricultural advance, whatever it is, it has to figure in the restructured statement which has to come, and additional 5% provision has to be done by the bank at the head office. Asset classification of remaining dues will continue to be as per the restructured portion. I am leaving all these things because no, the additional finance I told you will continue as a standard asset. Even an account is an NPA, additional finance given for nursing and things like that, whether it is a regular account or whether it is advance to agriculture, can be classified as a standard asset. One of the fundamental things in terms of natural calamity is quick relief by the bankers. So it is not that the calamity has happened 1.5 years back and today they are restructuring. That is not permissible, because the Reserve Bank of India says that the very purpose of this is to give them speedy relief. So within 3 months of such natural calamities, unless the calamity itself is fairly huge where they are not able to handle everything, then they have to approach RBI and take additional time limit. The restructuring should be completed within 3 months of the notification of the calamity. In case of agricultural advances, second and subsequent restructuring also will be treated as a standard asset. It will not be treated as subsequent because multiple restructuring has to be downgraded. Now we move to the circular on MSME. I will just quickly take, let me see. Have I exceeded my time limit, sir?
No, please carry on. It was important.
Yeah. I will quickly take you through 10 minutes because this is the last of the things and it's very important. What happened is that with the amount of introduction of GST, okay, the entire business segment underwent chaos, and based on that the RBI first came out with a circular to say in January 2018 that those accounts which are standard, those who are micro, small, medium enterprises and whose account is a standard asset as on 1st of August 2017, okay, such accounts instead of the 90-day norm, it was extended to 180 days. That was the first of the circular, okay. Of course, the conditions is that it should be MSME. Then the first circular when it came, it should be registered under GST. It also said the exposure of that entity cannot be more than 25 crores to both the banking institutions and also to other institutions, whether it's the development institutions or no. And in terms of 25 crores, both the fund-based and non-fund-based, both were to be taken into account for this purpose of being eligible for it. This is the first of the circular. That is from 90 days it was made to 180 days. Then these are all the norms, okay. But at the head office level for such accounts being restructured, 5% provision was being retained. The second one, this was first one was in January. The second one was in June 2018. And on 6th June 2018, they said that having regard to the input credit linkages and no problems which are still persisting in the GST portal, okay, they extended it, and at that time they said it need not necessarily be registered under GST. It is applicable to all MSMEs. So the requirement for registration under the GST Act was removed with reference to this circular. This was one of the significant change between the circular in January 2018 and June 2018. All other things more or less remain same, except that if the account has become NPA during this period because of non-payment, such accounts will continue to be classified as NPA. The third is that from 1st of January 2019, they have said that now the timeline has come, henceforth this 180-day norm is not going to continue. Progressively these 180-day norms will be withdrawn. How it is going to be withdrawn? That for those from 1st September 2017 to 31st December 2018, it need not be classified as NPA if it is an MSME, and it will be 180 days. But from January to February 2018, it will come down from 180 days to 150, and from there till April 2019, it will be brought down to 120 days, and from May 2019, it will be aligned to the extant guidelines of RBI in terms of asset classification. However, this is available only for a unit which is registered under GST. If a unit is not registered under GST, from 1st January 2019 onwards, okay, it reverts back to 90-day norms. For example, if an account is classified as an MSME, but not registered under MSME for whatever various reasons, including the turnover limit is below that, okay, as on 31st March 2019, since it's not a unit registered under MSME Act or GST Act, the applicable norms for them is 90 days, not this 180 days. Because after 1st January 2019, it is extant guidelines for non-GST registered units. However, there is one more thing. For example, there is an educational institution. It is exempted from GST. If such a unit is not paid as on 31st, is it a 90-day norm or is it 180-day norm for them? Wherever units which are exempted under the GST law, there is a separate clarification which has come in February 2019. Wherever units which are exempted under the GST law, for them also the 180-day norm will apply and not the 90-day norm. So these are all some of the things when you go there, you will find. And for this restructuring, it's a one-time restructuring allowed for MSMEs. They will be classified as restructured, but they will not be treated as NPAs. And there is a board has to clearly put out a scheme for how to go about the restructuring. Kindly take a copy of that, find out how many of these MSMEs have been restructured during the year, and there is a return for restructuring. Kindly see whether the return in restructuring maps with all the accounts which are restructured by the branch so that they match on that. And then finally also see whether it's a non-GST account which has been classified wrongly as GST and then given this dispensation also.
So finally, as on 31st of March, what? It's just 120 days now?
As on 31st March, it is 120 days.
So it's instead of 90 days.
Yeah, it's 120 days. It's come down. From 180 it has come to
GST units, it's 90, and for GST registered units, it's 120.
120 days as on 31st March 2019.
Of January, February being due, even December is due, is okay.
Yeah, if it is after anything before 1st December will become NPA because 120 days. If it is after say 3rd or 4th of December, then it will have that dispensation still. So the effective benefit from 180 days as on 31st March stands reduced to 120 days. So this is where we need to look, because what will happen is either at the back end the system after would not have been changed, or at the front end they may not tell what is it. So as auditors we'll have to keep this in mind and accordingly see whether large advances which comes across your area to look at, you take cognizance of this circular and do the needful. Yeah, one-time these are all the conditions related to one-time restructuring, which I am sure once you take cognizance of this circular you will find out. Yeah, they also say that restructuring should be completed on or before 31st March 2020. I don't know why they are giving such a long time. Okay, but that's there as part of the RBI circular. Post restructuring NPA classification of these accounts shall be as per the post restructuring. All things will have to be there. It is clarified that accounts can be classified. Okay, NPA can be restructured. However, the asset classification norms governing restructuring of NPAs will continue to apply, which means the restructuring does not preclude a non-performing advance to be restructured also. It only says that one-time dispensation for MSME so that they are in a position to restructure and pay that. But as on the date of restructuring, the account asset classification is downgraded to a substandard asset, then the asset classification will come to be substandard. Just because of restructuring, it cannot be kept as a standard asset. As a general rule, barring the above one-time exception, any MSME account which is restructured must be downgraded to NPA upon restructuring and will slip into progressively lower classification, higher provisioning requirements as per IRAC norms. This is 2 minutes I will take. This is largely likely to happen in very large branches where the loan amount is more than 2,000 crores. Okay, this RBI circular of 12/2/2018 was brought in, where you had stressed accounts like S4A, CDR, all these as a one-time measure, everything was, all the dispensation given are removed. Advances above 2,000 crore is initially coming, but progressively they will bring it down to 100 crore and above within a span of 2 years, which means it's already more than 1 year since this circular has come. In a matter of another 10 months or so, 11 months, we will expect that above 100 crores will also come into this dispensation. This is a very harsh dispensation. There it says even a single day's delay can be treated as an account as not performing, and it has to be referred to a resolution professional, and within 180 days the resolution should happen. Otherwise, the account has to be classified as or all the procedures related to insolvency can take over. So this is.
The Supreme Court was hearing this, any decision?
They have still not come on with this. So this is something which is the future of what is going to happen in that. But then, as of now, at branch level, this may not have much of a consequence. But I thought we should not leave touching on aspects which relevant to the profession. Interest subvention. This is the last of my slide. Interest subvention, for the first time, micro, small, medium enterprises after November 2018 are eligible for a 2% interest subvention. If your clients are having loans where the loan has been enhanced during this period, or new loan has been given to MSME, on that portion after 2nd November, they are eligible for a 2% interest subvention. So any of your clients are taken additional loans or new loans from banking institution, you can possibly look at, advise them, they will be eligible for this 2% interest subvention. And of course, it's up to 1 crore of loan, and if the loan is already taken, the additional loan only will be eligible for it. There is an enhancement of the limit. It's only the enhanced portion which will come and not the entire limit. It has to be certified by auditors. This is where I would like you to pay enough attention. Kindly go through this circular before you certify, because there are certain norms related to that. Kindly keep yourself abreast about what is that you are expected to do, and then go about to certify this, because also on account of the institute's regulation now, that all certificates you will have to get the requirement to upload and things like that. All certifications, these also will have to load it to the institute platform also. So there are 2 different certificates which has to be given by us in terms of interest subvention. Kindly go through that, see the scheme, and then accordingly satisfy yourself before giving the certificate. That's it, I think. Thank you very much for a very patient listening. Yes. Yes, sir. The impact of the crop loan waiver scheme on the government is not ascertained, for the reason it looks more like a political gimmick, because at the ground level at the banks, what was said that in terms of NPA accounts, there has to be a 50% haircut which has to happen. The balance only they are going to pay. The bankers were expecting that 50% to come, but even that money has not come. A very small portion only has been given. So the bankers are waiting with bated breath whether at all this will come or not. If it doesn't come, any of the borrower is not going to pay. We have to classify such accounts, maybe not now, next year as loss assets and clean it up. As of now, the scheme is in operation, so we may have to wait and watch. Thank you.
Thank you, sir. We have come to an end of excellent first technical session. I thank Suresh for his time and efforts for sharing his knowledge. May I request our chairman Shivaram to present a memento to the speaker as a token of respect and gratitude. Now we